This is a review of StockPair.com, a binary options provider. The company was founded in 2010 and is owned by Nextrade Worldwide Limited, which is authorized and regulated by the Cyprus Securities and Exchange Commission, CSEC. StockPair utilizes a proprietary trading platform that is simple to use. You can select an asset by trade from the top-down menu, as we can see here. Now, depending on your risk appetite, you can choose to trade as little as $20 or as much as $6,000. StockPair's trading platform offers a wide range of tools and features for both newbies as well as experienced traders. It also supports mobile trading with the iOS and Android apps. Now, on the website, traders can choose the assets they want to trade from the top-down menu, as we can see here, that drops down, starting from $20. In terms of the types of trading contracts available, these come under the umbrella of binaries and pair options. Now, binaries are basically classified as simple up-down binaries, and there are also KIKO options. We'll explain KIKO in a moment. Now, the basic up-down binaries are basically the simplest type of binary you can trade, and any trader simply needs to determine whether the price will end up higher or lower than the entry price upon expiry of the option. Trade time frames range from 60 seconds to the next hour, the next day, or even the next week, and all the way up to 150 days. So if we have a look at this option here, we've got the Euro US dollar, and we select the time frame that we want the expiry of that trade. So we can do a simple 60 seconds all the way up to 150 days, as we previously explained. We enter the amount, simply click trade, and the trade is actioned. So we can do that at, say, 15 minutes. I believe it's going to go down in value, and we place trade, and then the trade is opened. Now, KIKO options essentially work in the same way as one-touch options, but with one key main difference. With KIKO options, traders have to determine if prices will hit the upper or lower price barriers first. In fact, a KIKO option provides two price targets, and you have to choose which one is going to be hit first. If you predict correctly and the target is hit, you're basically in the money. The trade will expire out of the money if the price hits the opposite of what the trader predicted. And please remember that there is no expiry on this kind of option, and that means that your investment will hold until one of the two borderlines are hit first. So let's have an example of this. So as we can see, there's no expiry. We select the trade amount here, so we'll use, say, $100, and we will say have that there. So we're saying in this example that it's going to hit this one first before it hits that one. And then, say, for example, we want the reverse of that we believe it's going to hit this one first before it hits that one. And if we're right, we will get $177. If we're wrong, we'll lose $100. So looking basically at the chart, it's in consolidation, as we can see, and it's pretty hard to see where it's likely to hit. So we've got quite a wide channel there. So just for the sake of making an example, we will say that it's likely to go down in value and likely to hit this lower level first. So we'll say trade that one. As we can see, the trade is being processed, and there we go. And this will stay open until either we were right and it hits this one first, or wrong and it hits this one first. It doesn't expire until one of those actions happen. Now, StockPair is a broker that specializes in pair trading, such as gold versus silver, or say, for example, eBay versus Amazon. We've got lots of other examples there. Now, with pairs trading, you take two assets and predict which of them is going to perform the better in terms of a percentage within a certain time frame. Now, these are almost the same as forex options, such as the US dollar euro, for example, except they involve either other assets than currencies such as Google, Facebook, oil and silver, and many others. Now, pair options are either fixed or floating. Here we have a fixed example, and then we have a floating example. With pair options, it really doesn't matter if the wider market is going up or down. If the market goes down, you will still profit if you selected the better performer. This is due to the fact that the pair options value is influenced only by the relative performance between the stocks, between the two that you are looking at. One is doing better than the other, basically. Even if the stock you choose goes down, if the other one is doing worse, yours will be in the money. Now, the outcome of a fixed pair trade is decided accordingly to how the two chosen assets perform in relation to each other from the time of the option purchase to the expiry of the option. And then fixed pair options are also based on the performance of the stocks you pick from the start of the trade to the expiry date. So we'll just have a quick look at the fixed pair option. We've got Facebook here and Yahoo competing against one another. So basically all we're saying is we're going to say that in the next, say, 60 minutes, that Yahoo is going to do better than Facebook in terms of a percentage, and we're wagering $100 on that. And if we get it right within that 60-minute time frame, if Yahoo have done in terms of a percentage better than Facebook, then we get $182. So let's place that. It's probably unlikely because Facebook are due to make an announcement today. So here we have floating pair options, which is somewhat different to fixed pair trading. Floating pair options are judged based on a predefined period, so they are different in that the period does not necessarily have to start the moment you hit the trade button. When you choose the floating market, your choice is narrowed by today, this week, or this month. Now, we'll use this example of, say, Facebook versus Google, and how it works is you choose your period, and depending on where the stocks are between each other, varies on what you're able to trade. So for example, it's not letting us trade today, but for this week it's allowing us. And basically what we're saying is that if Facebook is going to be higher in value than Google by the end of this week, we'll get 81%. Which means that we would get a payout of $90.50. If, on the other hand, we reckon that Google is going to be higher than Facebook by the end of the week, then we get $62, a 24% return. The reason that it's much less is because currently Google is doing much better than Facebook. So if we choose the underdog and trade, we get a better return because the risk is higher. But if we choose the one where they're currently doing pretty well, then our return is much less. And the more that, say, a stock or whatever the pair that we're looking at, the more that one is more of an underdog than the other, the higher the return can be. So the basics are pretty simple. Pick two stocks, choose which one will outperform the other, and if you pick right, you profit. Floating pair returns are based on relative odds, so just like in sports, if you back the favorite horse, you will generate less percentage profit, 10 to 15%, to choosing the underdog, which can be anything from 250% to 360% returns. Fixed pairs are even simpler in that you will have a fixed percentage profit return if your pair wins in the amount of the time that you've chosen, from anything from 5 minutes to a few days. Now, we found that StockPair trading platform to be quite unique and intuitive to use. You can easily select between binary options or pairs and then select which underlying asset or option that you wish to trade. Expiry times ranging from anywhere from 60 seconds to all the way up to 150 days, depending on your trade, and you can choose between small trades of $20 to, which is the minimum, all the way up to $6,000, which is the maximum. Your selections are clearly highlighted, and once you have chosen the direction of the trade, for example, we've got Yahoo here, then your choice will be shown exactly how much you stand to gain, including the return percentage. StockPair also offers long-term options of up to 150 days, and other features include early close and the trader sentiment indicator. If the trade is more than 1 hour, the trader can opt to exit early, and uniquely to the platform can exit even if he's in a profit or loss. The trading sentiment indicator can be found at the bottom of every chart. This will show the portion of traders that have either chosen up or down. Now, the minimum deposit is $250. It's unfortunate, and one of my pet peeves is that they don't offer a demo account. Accounts are supported in US dollars, euros, or British pounds. Withdrawals, there are no fees for credit card withdrawals. Wire transfers of anything under $500 will incur a $25 US processing fee. There are 150 tradable assets, including currencies, commodities, stocks, and indices. Various expiry times are available, as we've previously explained, from 60 seconds, 5 minutes, 15 minutes, 30 minutes, an hour, 24, and beyond, all the way up to weeks and months and 150 days. Sadly, as we've said, that there's no demo account, and the only way you can get a demo account is actually if you deposit money into your account. And again, that's at the discretion of your own account manager, which is very unfortunate. There are bonuses, and bonuses are usually added to the trader's account after executing a trade volume of 40 times the value of the bonus. The volume must be reached during a period of 45 days after the bonus is granted, or as specifically appears in the bonus section of the client account. Traders are eligible to withdraw the balance in their account at any point of time, subject to the general terms and conditions of the website. StockPair get a thumbs up here, as they don't lock your deposit when getting a bonus, although you will have to trade an amount equivalent to 40 times the bonus before the bonus is truly yours. Now, if you'd like to learn more, StockPair have an education section on their website. Like other binary option providers, StockPair offer differentiated accounts. In other words, The more you deposit, the more benefits you will have. There's a non-premium account which starts at $250, while the silver account provides a deposit which is provided at $1,000. StockPair tells us this account is good for beginners. A gold account will require a deposit of $5,000, while the minimum deposit for a platinum account is actually $20,000. Silver accounts and above will get cash back every first of the month. This literally means giving you back a percentage of a trading volume as money in your account balance. So a silver account will get 0.5% cash back, gold accounts will get 1%, and so on. For gold accounts and above, help of a complimentary trade expert is offered, and you all know what I think about those. So why don't we like so-called experts from the very broker or website that we're trading on to help us with our trading? Why don't we like that? Companies such as StockPair and brokers such as StockPair, etc., only make money when you lose money. That's how they make money. So it's kind of counterintuitive for them to want you to do really well and take profit from them. So it really makes little sense for them to provide you with an account executive or a trading partner or assistance of any kind that's going to help you benefit. And one of the ways that this has been done in the past from knowing how these companies operate is that at first they will seem to be helping you, that they'll offer you sort of advice and trading tips and so on, that will actually appear to be pretty good, and that you may actually win a few times. You know, your trades that they've given you will actually do pretty well. And the idea then is that they look to sort of bump your trading account more for you to invest more in your account in the hope of future, even greater returns, because of course they've helped you make money before. But that's only just to grab more money from you later. That's how a lot of these work. So just be aware that it may appear pretty good at first and may look like they're helping you, and may in fact you will get some winning trades early on, and these will be relatively small trades. But don't be led in by this. Their job is to, at some point, get as much of your deposit of your money from you as quick as possible. So, my general advice is, when you get offered a trading partner or some free advice or assistance or an account manager that's going to say, let me help you trade. No, don't do that. Just say, you'll make your own trading decisions and keep it at that. Basically, they lose money when you make money. They make a lot of money when you lose your money. There is no other way of looking at it. That's it. So now StockPair offer a unique trading platform, and it is quite user-friendly. Let's have a look at some of the positives and some of the negatives. Start off with the positives. They do have innovative products. The best range of pairs, options, contracts makes this broker kind of unique. The execution and the price feeds all match, and the feed provided by routers is pretty good too. Now let's look at the cons, the negatives. There's no demo account, which is funny because they expect traders to actually deposit money to use a platform they have never seen. But if you make a deposit, you can ask an account manager to let you try a demo, although it's by no means guaranteed that they'll actually offer you one. They don't return us our investment when a binary ends in a tie. So if I open a binary trade and it results in a tie, i.e. the markets don't move, then that's considered a loss against me. If you try to place an order during busy periods, market sensitive news for example, you might encounter a rejection due to market conditions were unable to place your order. You'll get this alert coming up. If you're in an inactive period for longer than say 3 months, you'll be charged a monthly maintenance fee of $20, pounds or euros, according to the currency that you've opened your account in. And I've also heard of cases where StockPair have blocked consistent winners from trading. So to conclude, the StockPair platform is an example of a really well-designed proprietary trading platform, and I haven't seen complaints with regards to getting withdrawals, and their live chat people are pretty responsive. However, these guys might also call you to help you trade, as we've previously discussed what we feel about that. And really those calls should be ignored. The truth is that their analysts are just salespeople and probably know less about trading than you do. And I hate being harassed to deposit more money. So that's StockPair. If you found this video useful, I would really appreciate it if you'd hit the like button. Thank you.